Good morning. Welcome to America First Wealth Management Investment Outlook for Monday, February 10th, 2025. My name is Dan Liu. I'm the Chief Investment Officer and Portfolio Manager at America First. First, our standard disclaimer, we're not offering to sell or purchase any securities or products. This presentation does not constitute any investment advice. Our opinions are expressed as of February 10th and are subject to change without notice. So we like to begin with our market outlook summary first. And first of all, it's after Super Bowl Sunday, and congratulations to the Eagles. Very exciting game. Big blowout by the Eagles. Philadelphia is probably sleeping in late after celebrations, but in any event, very exciting weekend. Congrats to all football fans who enjoyed a very exciting Super Bowl. So in terms of our market outlook, I think the focus we are looking at near term is what's happening in the Treasury securities market. We do expect that longer term bond yields may continue to rise. And why is that? When you look at the previous administration, Treasury Secretary Janet Yellen, she had increased the sales of Treasury bills, which is typically a 1 year or less maturation, to about 22% of all public debt, which is a little over 36 trillion currently, above the recommended range of 15 to 20% that various um, uh, organizations and agencies and also private investors have been recommending. So that higher um, shorter term structure is going to result in a number of things. First, we saw it in the inverted yield curve, which existed for most of the last 12 months. And it has created higher allocations to money markets and shorter term investments, which we've also noted in higher money market balances and even the over 350 billion in cash that Warren Buffett is essentially putting in Treasury bills. So given the new administration under President Trump and the new Treasury Secretary Scott Bessent, he's likely to address this by adjusting the term structure, and that means issuing longer term debt as the higher proportion of short-term debt does mature this year. And also the foreign ownership of U.S. debt, particularly China, which in the past was the largest foreign owner of U.S. debt, as that shifts, it'll be very important to watch. We have some data on that following this. We also want to make investors aware that regarding stocks, historically, February on average is the second worst performing for the stock market. We're also through most of the Magnificent Seven company earnings report. The important one in the Magnificent Seven remaining is NVIDIA. They report February 26th, and everyone will be listening in to see what they state as their outlook, especially after the impact of the DeepSeek Chinese AI model announcement earlier this month. And also, we're adding a little section now. We're going to call it Trump Watch, given the heightened level of activity by the Trump administration. And he's certainly moving quickly and doing a lot. And interesting story we saw over the weekend. Trump's schedule is waking up at 6 a.m. every day and working straight through until midnight. So certainly he's been getting a lot done, and a lot of people are trying to catch up with what he's doing. The executive orders are important to watch, and we'll try to highlight the executive orders that we feel have an impact on the financial markets and the economy. On February 3rd, Trump signed an executive order announcing a plan for establishing a U.S. sovereign wealth fund, which has not existed before, and other countries, as investors know, do have large sovereign wealth funds. So this accumulation of um, wealth, and Trump has hinted that this could be funded by tariffs. The sovereign wealth fund would focus on long-term investments, whether it's in infrastructure, it could be in certain technologies or industries. Um, should be an interesting way for the country and the government to directly invest in and participate in areas that could benefit the country and um, going forward. A little surprise on Sunday yesterday, Trump told reporters that he planned to announce new 25% tariffs on Monday, targeting imports of steel and aluminum. So that's certainly going to certainly bolster the materials companies in the U.S. and it should have a certainly a negative impact on exporters of steel and aluminum into the U.S. And I wanted to put down a link here that our viewers can go to see the actual executive orders that Trump is issuing. There's well over 50 already so far year to date, and it's still early February. So go to federalregister.gov, presidential documents, executive orders, Donald Trump, 2025. Summarizing key macroeconomic events, um, Chairman Powell, his testimony is Tuesday, 10 a.m. Also has testimony also on Wednesday, I believe. It'll be important to watch his thoughts and comments on what the Fed has been seeing and what their outlook is. Wednesday and Thursday, a very important core inflation rate and PPI on Thursday, both at 8:30 a.m. Consensus is 0.3% month over month. We also have the initial jobless claims Thursday, 8:30 as well. Consensus is for 216,000. Ending the week on Friday, Valentine's Day, retail sales forecasted to drop 0.1% month over month. So digging in a little bit in the total public debt analysis and looking particularly at top foreign owners and Japan and China and the UK are the three largest holders of U.S. Debt. This chart's pretty interesting. Shows the percentage of foreign-owned U.S. debt. Japan is obviously U.S.'s biggest friend there, 12.7% of all U.S. debt. Uh, China historically had as high as I think 1.2, 1.3 trillion, and that's dropped significantly to about 769 billion. But it's still significant. Their second largest holder, 8.9%. The UK has picked up their holdings of US debt dramatically, also being a friend of the US. That's roughly about 8.87%. Luxembourg, number 4, and Cayman Islands, number 5. Kind of interesting. The previous chart said Cayman Islands were the fifth largest holder of U.S. debt, and this chart here shows Canada is the fifth largest. But this chart shown, I do believe it's Canada. So the previous chart being a Cayman, I think, is wrong. But we'll check on that. This chart is interesting because it shows roughly the last 3 decades by decade of country ownership of U.S. Treasuries. So 5 countries hold about 3.3 trillion of the roughly 36 trillion of U.S. debt. And those 5 countries represent about 40% of all the foreign-owned U.S. Treasuries. So very significant ownership. You can see the jump in Japan from April 2004 to April 2014. Slight drop as of April 2024, but um, number one. China was number one previously in the decade in April 2014, but you can see a considerable drop in U.S. Treasury ownership as China has diversified, especially into gold. The UK has picked up the slack, increasing their U.S. Treasury ownerships, as you can see here, Luxembourg and Canada as well. Um, there is a significant amount of public debt maturing this year, estimated over 9 trillion public debt, a significant amount. And the percentage of that that's maturing in the next 12 months, 1 year or less, sorry, is 9 trillion, sorry, and the okay, so 9 trillion essentially. But this month, particular, I want to point out the longer term notes and bonds being auctioned this month. We have a 3-year, 10-year, and 30-year. Significant amounts, 58 billion 3 years, 42 billion 10 years, 25 billion in 30 years. So the auction dates we definitely want to take note of. We've got the 11th, which is tomorrow, the 12th Tuesday, Wednesday, the 30th, Wednesday for the 30-year bonds. We also have a 20-year bond issuance, no offering amount noted on February 19th. So it'll be very important to see how these auctions go off. These are sizable amounts of longer term debt, and we'll see if they're picked up by the market without any adverse impact to interest rates. And certainly gold is taking notice. This is a 10-year chart of gold and clearly breaking out here. This morning on Monday, we are over 2,900. I believe it was like 2,942 US dollars gold per ounce. So we're at new record highs for gold. And this is the average monthly returns chart for the S&P 500 since 1928 to 2023. You can see that September historically on average is the worst. February is the second worst. May is the third worst. Turning to weekly market stats, choppy week last week. Only the NASDAQ 100, international stocks and bonds were up. The Dow, the S&P, small caps measured by the Russell 2000, Russell 1000 growth, 1000 value were all down. The month to date is the same as the 1 week. And the year to date was still positive in the black, in the green for all of the indices. International stocks are leading year to date. EFA is up 5.29%. Russell 1000 value, as we pointed out before, is we're seeing some breath into the value names being second and Dow being third. Magnificent Seven names had a very choppy and poor week. Only 2 out of the 7 names were up. And that was NVIDIA and Meta. NVIDIA had a good rebound for the week. Meta was strong, as many of the cloud names and the AI names had volatility. Tesla was the worst performer, and Alphabet was the second worst performer. You can see now, year to date, very Meta is running away with up 22%. Amazon's the only one that's positive year to date, up 4.45, and the rest of the names are getting hit. And obviously that's having an impact on the overall market averages. We're seeing some diversification, as I mentioned, into larger value names. Turning to the sector performance, and the week was the majority of sectors were up on average, but consumer discretionary was the worst. Real estate, energy, and tech were the top three performers. Turning over to the year to date, the breakaway sectors to us look like financials and healthcare. Financials up 7.2%, healthcare up 6.4%. Still in the black for all of the sectors, but we do expect that to change as the year progresses. S&P 500 chart for the 1 year period. We're kind of leveling off here, as you can see, as we digest the earnings period and the macro concerns going on, and also new presidential administration with a lot of the changes going on here. We're slightly below the 10-day moving average. The RSI has come down a bit. And we do expect some sideways to down results for stocks, as February is the second worst performing month on average, and we don't see anything that points out to that historical record being dramatically different. It's also a shorter month, so we have a little less days for momentum investors to try to get something going. And we're through the bulk of the key earnings reports as well. But again, everything can change. As we've seen in the past, NVIDIA announcements do shift the direction of the markets. And being that there's so much money invested in the future of AI development, it'll be very important to watch. 10-year Treasury yields, the trend has been down, but the recent turn, particularly on Thursday, Friday, yields did pop up. For the week, however, the 10-year yield was down 9 basis points, ending at 4.49 on Friday. And also year to date, we're now down 9 basis points. The yield curve has shifted a little downward on the longer term versus end of January and end of the prior year. But we don't expect the shift down to continue given the amount of treasury auctions. So the near-term trend may not be your friend. Bear in mind the auctions that are coming up. The economic calendar, we highlighted the important ones here, so I'll just flip through that. Powell testimony at 10 a.m. Inflation expectations this morning, 11 a.m. Consumer inflation, 3%. I'm sorry, previous was 3%, forecast 3.1. It's a minor number, but important to see what expectations look like among consumers. Turning to Wednesday, core inflation rate, and again, Fed Powell, Chairman Powell testimony continues. PPI on Thursday, we talked about. Friday, retail sales. S&P 500 earnings. There's still quite a few earnings, but the important one, the major ones, are out of the way. We do have inside McDonald's on Semiconductor and Rockwell reporting pre-market Monday. after the close, Arch Capital, Cincinnati Financial, Vertex. I'm not going to go through all these in detail, but just flipping through, highlighting some of the key ones. Tuesday before the open, Coca-Cola, DuPont, Marriott, after close, AIG. Wednesday, a bevy of names reporting, um, Biogen, CVS Health, Martin Marietta. After close on Wednesday, Cisco, be important to watch. MGM Resorts. And on Thursday, a bunch of utility names, American Electric, Duke, Moody's. Remember utility names, PG&E. After close, at Applied Materials, important semiconductor capital equipment company. That should be an important one. Palo Alto Networks, also in the AI space. And closing out on Friday with Moderna, which will be an important one to watch. Moderna is a big, important vaccine company, and that stock's been under pressure recently, but it'd be important to see what they talk about in terms of vaccine um, outlook, especially as the avian flu has been running rampant, and consumers are seeing the impact of that with much higher egg prices. I saw egg prices looking at like $8 a dozen last week, if you can find them. Been certainly a huge demand for eggs recently. And that concludes our investment outlook for the week. Thanks for tuning in. If any interested parties or investors or would like to talk with us directly and get more information about our services, please feel free to contact us. My email is dlu@americafirst.fund. You can also contact Jim Monahan and jmonahan@americafirst.fund. Thank you for tuning in. Look forward to talking to you again next week. Have a great week and good investing. Bye bye.